In this video, I wanted to cover how to find a good bank in 2023. Someone had asked me about our checkings account actually. In this video, I made about a high yield savings account. I had written it down, and since there has been some recent scandals with Wells Fargo, I thought this would be the perfect transition video.
Well, the scandals aren't exactly recent. I've just been living under a hole very clearly for the last couple of years.
Wells Fargo was reported to have lost its Better Business Bureau accreditation in 2016 due to a series of failed home lending loss mitigation programs, as reported here. This was based on an order issued by the Office of Comptroller of Currency, which, by the way, is an independent bureau within the United States Department of Treasury. Furthermore, in late 2022, the Consumer Financial Protection Bureau had ordered Wells Fargo to pay more than $2 billion to redress to consumers and $1.7 billion civil penalty for legal violation across several of its largest product lines. According to the Consumer Financial Protection Bureau, Wells Fargo had repeatedly misapplied loan payments, wrongfully foreclosed on homes, illegally repossessed vehicles, incorrectly assessed fees and interest, charged surprising overdraft fees, and conducted illegal activities that affected over 16 million consumer accounts. All this research blew up when I received an email that we were informed Wells Fargo officially moved us out of the college checking account to the everyday checking account because they got rid of their college checking account, and we were warned of a $10 increase of maintenance fees. I was incredibly shocked actually to read this email because we are definitely no longer 24. That happened 3 years ago. And when we did turn 24, we drove and made sure we went into a branch to let them know that we were going to merge bank accounts and we're no longer in college. And so all of this college account talk should have been resolved then, which speaks to their customer service, I guess. I'm actually pretty surprised that this bank is still in business today. If you are working with Wells Fargo internationally, just be aware. Now, I don't exactly like giving people bank recommendations because I'm not here to market for banks per se, but I will show you some banks here today that I have looked into myself for our personal usage as we slowly transition out of Wells Fargo completely. In my previous video, I had stated our use of Ally Bank, and if you're still not sure about high yield savings account or online banks, go check it out. I break down exactly how much we earn in interest per month with Ally Bank, and if you go with other accounts, you can expect something similar in that range. Before opening a bank in 2023, here are the key topics I would consider for your financial sake. Number 1, check if the bank is FDIC approved. So if you go to a third-party ranking website like NerdWallet, for example, you'll see the ranking of the bank and what they think about it, and then there should be a little fine print that says FDIC insured. FDIC stands for the Federal Deposit Insurance Corporation, and it was formed as an insurance for bankers and consumers in the event of a fallout by the insured bank. Say in the instance of Silicon Valley Bank. On the outside, none of us who were involved in economics heavily or finance heavily or worked in SVB saw the fallout of SVB and the collapse of it. Some people were predicting it, but if you're a normal person, you just have no idea when a bank makes a call that it files for bankruptcy. And if that case, the FDIC does say over here, every account, every depositor that had an account in there is insured up to $250,000 per insured bank. Honestly speaking, as a consumer, that could mean anything above $250,000 could have not been covered. We're just not very sure. So I'd be very, very cautious of liquidated assets that you are depositing into a bank. To make this process even more cautious, it's okay to have maybe 2-3 banks, because if the FDIC is going to tell you they're covering up to $250,000 per insured bank, it's okay to have maybe 3 online banks. At that point, I do want to share with you the following if you're looking at assets like investment assets. It does not cover stock investments, bond investments, mutual funds, life insurance policies, annuities, municipal securities, safe deposit boxes or their contents, treasury bills, bonds or notes, and crypto. So with that being said, there is a little bit of risk over here because it seems like the FDIC doesn't cover anything that is non-cash liquid. So anything that's tied to an investment that you own a part of another company, they probably are not going to cover for it. And crypto, unfortunately, is included in this list. So make sure that is something you look into. This is exceptionally important, in my opinion, for smaller banks particularly, because smaller banks don't have a long history. And what we know is that a lot of the times we go with larger banks because of their long history, and either they screw up real bad, they have a history of picking themselves back up again and being able to keep providing the services they have been providing. Smaller banks, you have no idea what's going to happen to them. They could evaporate. So if you are going to go with a bank that has less history and less reputation, I would look at this FDIC and take it pretty seriously. Looking at the online bank spectrum, popular online banks like Lending Club, Ally, Citibank, SoFi, PNC, etc. The list goes on. They're all FDIC insured. 2 is check for hidden fees. So there actually are some very common hidden fees. And some of these are, I guess, hidden because we don't really naturally look out for them because it's not the first instinct that we think about. And I'm going to list them here. The number one that we all know is not really a hidden fee at this point is the monthly maintenance fees for checking and savings account. For Wells Fargo, we had our checking account with them and that was $10 a month. Out of network ATM fees, a lot of the times if you're going with an established bank with out of network using your ATM, for example, if you want a cash pulling out, they will have fees associated. For a lot of these online banks, they will typically reimburse you an amount of that ATM fee. Overdraft fees. So overdraft is taking out of your account more than what you already have in that account. For example, let's say you have $200 in your checking account and you go to the ATM and you pull out $250. The $50 difference is an overdraft and you will typically have to pay the bank back that money.
Obviously, banks always want their money back.
But also a fee associated. Wells Fargo and a lot of large banks charge an incredibly high overdraft fee, like $35. So every single time you accidentally, even if it's maybe like 1 cent or $1 more, anything over, they're going to charge you $35 in fees, which is quite ridiculous. Another one is the insufficient funds fees, which sometimes banks, if you have a checking account with them and there's a lot of benefits, they want you to have a minimum deposit of that checking or savings account. So if you do have that in mind, just know that if you go below the minimum deposit, you're going to be subject to a nice insufficient funds fees for your account. Paper statement fees. So thankfully, these are phasing out just a little bit with the rise in online banks. We no longer have to worry too much about having all these paper statements because a lot of things are sent to us via email. Wire transfer fees. This is an important one. Go have a look at the bank that you are interested in and how they do their wire transfer. So for Wells Fargo previously, they had charged $3 every single time we did a wire transfer from my checking account to maybe a savings or business account. Sometimes it's less, sometimes it's more. So really check that out. Dormancy fees. I found this to be pretty surprising because some banks consider your account to be dormant if it hasn't been having any activity for the last 6 months. Foreign transaction fees, that's actually a pretty popular one. Most small banks and large banks charge for foreign transaction fees just because of the nature of how long it takes and also the currency differences. For Ally, it's 1% of any transaction coming through a foreign bank, like let's say Taiwan. And lost card fees. I have to deal with that. I think it was like $25 for the Wells Fargo because I had at one point lost my debit card. I have never lost a single card from that point onwards, but sometimes you do get charged a fee to reprint a card. Number 3, which is arguably the biggest surrounding popularity of online banks compared to big banks, and that is the best interest rates. In general, popular online banks is going to offer you between 0.25 and 0.5% APY for a checking account and about like 3.5 to around 5% for high yield savings account. Some banks are higher than that range, some banks are lower than that range. It depends on the other services the bank is going to offer you. For checking accounts, due to the nature of cash flow, i.e. you're taking out money as fast as your employer is depositing it, most people don't leave money in their checking account. They're putting it directly into their investments, into their savings account, into other places, and then more money comes in and out. That means the interest rates that the bank's going to offer you for your checking account is going to be substantially lower than your savings account. Due to that nature, the bank knows that they're not going to be able to use the money in your checking account. I find a bank though that is somehow beating all the other banks, and it is lesser known. It's quite interesting. It's called the Redneck Bank. It's offering up to 5.3% APY on checking accounts with $15,000 or less in your account. Now, just because of what I just said. Banks want to use your money. Obviously, they don't want to pay you 5.3% very high if you're going to have so much in that account. You'll be offered around 0.5% if you have more than that in your checking, and at some circumstances 0.25%. So after that amount, you'll be looking at the typical 0.25 to 0.5 that most online banks offer for checking accounts. 4 is to filter out the good reviews and check out for the worst case scenario analysis. So what this means is you go onto the bank's webpage, and instead of looking at all their 5 stars, go and filter out for the 1 stars, the 2 stars. This will give you an idea of the worst case bank dealings that you'll have to go through if you did choose a bank and they had to be a situation that popped up. I bank with Ally, and I'm very surprised they left their 1 and 2 stars on their website for people to review as opposed to taking them down like some other banks do. So I'm very impressed by that. But it looks like here one of the first complaints that people had was poor customer service, which I'm pretty surprised about because I think they have great customer service. There's been complaints about that the software isn't functioning very well, phone reps are bad, again, customer service. There's something about a joint account, and a lot of it has to do with high-yield CDs are not very functional. I don't have any experience with the high-yield CDs, but what I do know is that just reading these comments will give you an overall holistic idea for the worst case scenario you'll have to deal with in this bank. That brings me to my next point. Good old customer service is really important. Now, despite the fact that I know right now in the market, there is banks that's offering even higher interest rates than what Ally is providing for us, we've stuck with Ally for the last 2 years and haven't changed a bank here and there just because we really like the fact that we can call them and within 5 minutes they pick up the phone and we're able to communicate what we need or our concern with them, and the issue will be resolved. Good old customer service is quite important for online banks, especially if you don't have a physical location you can drive in and talk to someone. And lastly, your checking and savings account does not have to be part of the same branch. In the past, even about 8 years ago, I remember being freshly admitted into college and I felt like I needed to have my savings and checkings account in the same branch. 1, because of some loyalty, and 2, because I really enjoyed just the ease of having the same bank for everything. But with the transition to online banks and the ever-evolving bank industry, it's okay, given the FDIC limit per insured bank, to have your eggs all in different baskets, especially when it comes to online banks. All the online banks I had researched over here have very similar benefits. They're all slightly different, maybe just slightly different interest rates or slightly different fees, only slightly different, but in general, they all have pretty good services, and you could start looking into maybe having a check-in somewhere and multiple different savings or vice versa. For example, after reviewing everything online, I'm probably still gonna go with Ally Bank as a primary checking account and for minor savings, and then maybe move over to Citibank for additional high-yield savings account. With all the different banks popping up left and right, I admittedly cannot keep up, just like everyone else, with the great banking revolution of America. Don't feel the need or the pressure to switch over to an online bank just because the next month there's going to be another interest increase and your bank has not kept up with the interest increase immediately. The interest rates giving you maybe 1 or 2% higher is ultimately not going to affect exactly how much money you're going to make in the long run, because they're all maybe like a couple $100s difference if you really do the math. I hope that was helpful. Take care.